Your credit score is like your financial reputation. It can open doors to your dreams or slam them shut right in your face. Want to buy a house, lease a car, get a great credit card, or even rent that perfect apartment? Your credit score is the gatekeeper for all of it. But here's the thing. Most people are flying blind. They don't really understand how credit works, what actually moves the needle on their score, or how to protect this crucial financial asset. In this video, we're pulling back the curtain. We're going to break down exactly what credit is, how your score is calculated, why it matters so much, and most importantly, give you a step-by-step guide to building and maintaining excellent credit. So, let's start with the absolute basics. What even is credit? Simply put, credit is your ability to borrow money or get goods and services now, with the understanding that you'll pay for them later. Every time you swipe a credit card, take out a student loan, or finance a new phone, you're using credit. Your entire history of borrowing and repaying creates what's called a credit history. And your credit score? That's just a 3-digit number that neatly summarizes that entire history. Now, why should you care? Because your credit score touches almost every part of your financial life. It affects mortgage approvals and how much interest you'll pay, car loans and leases, credit card limits, and whether you get those sweet rewards, rental applications, and even your cell phone plan. In some industries, employers even look at it. A good credit score can literally save you thousands, even tens of thousands of dollars over your lifetime. A bad one? It can cost you both money and opportunities. So what is this magic number? A credit score typically ranges from 300 to 850. The most common one, used by 90% of lenders, is the 𝙃𝙀 score. Generally, a score of 800 and above is exceptional. 740 to 799 is very good. 670 to 739 is considered good. Anything below 670 starts to fall into the fair or poor categories, and that's where things get expensive. So how is this score actually calculated? It's not a mystery. 𝙃𝙀 breaks it down into 5 key factors. The single most important factor, making up 35% of your score, is your payment history. Do you pay your bills on time? Every single late payment, collection, or bankruptcy seriously damages your score. The second biggest piece, at 30%, is your credit utilization. This is how much of your available credit you're using. If you have a $10,000 credit limit and a $3,000 balance, your utilization is 30%. The golden rule is to keep this below 30%, but the real pros keep it under 10%. Next up, at 15%, is the length of your credit history. The longer your accounts have been open and in good standing, the better. This shows lenders you have a long, stable record of responsibility. Then we have credit mix at 10%. Lenders like to see that you can handle different types of credit, like a mix of credit cards and installment loans. Finally, the last 10% is new credit. Have you applied for a bunch of new cards or loans recently? Too many applications in a short time can signal risk and temporarily lower your score. Okay, so how do you check your score and reports? You are legally entitled to one free credit report every single year from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion. You can get them at annualcreditreport.com. For your score, you can use free apps like Credit Karma or Credit Sesame, or check your bank or credit cards app. Many offer free 𝙃𝙀 scores now. Now for the big question, what if you have no credit at all? No credit? No problem. Here's how you start from scratch. First, apply for a secured credit card. With a secured card, you make a small cash deposit, say $200, which becomes your credit limit. You use it like a regular credit card, and your payments are reported to the bureaus. It's the perfect training wheel for building credit. Second, you can become an authorized user. Ask a parent or family member with a great credit history to add you to one of their cards. Their good habits will start to reflect on your credit file. Third, look into a credit builder loan. These are offered by many credit unions and fintech apps. You make small, regular payments into a savings account, and those payments are reported as loan payments, building your history. After the loan term, you get the money back. But what if your score isn't 0, it's just low? Don't worry, you can fix it. Here's your action plan. Number 1, and this is non-negotiable, pay on time every single time. Set up auto pay for at least the minimum payments so you never miss a due date. One late payment can undo months of hard work. Number 2, lower your credit utilization. Focus on paying down your balances. You can also ask for a credit limit increase, but be disciplined. Don't use it as an excuse to spend more. Third, do not close old accounts. Even if you don't use an old credit card, keeping it open helps the average age of your credit history, which is a good thing. Fourth, limit new applications. Only apply for credit when you truly need it, and try to space out applications by at least 6 months. And finally, number 5, dispute any errors. Carefully review your credit reports. See a late payment that wasn't actually late? A collection you don't recognize? Dispute it with the credit bureaus. They are legally required to investigate. Let's quickly bust some common credit myths that hold people back. Myth 1. Checking my own score hurts it. False. Checking your own score is a soft inquiry and has 0 impact. Myth 2. Carrying a balance on my credit card helps my score. Absolutely false. You do not need to pay a single penny in interest to build credit. Just use the card and pay the statement balance in full every month. Myth 3. I need to go into debt to build credit. False. You need to use credit responsibly, not accumulate debt you can't manage. Remember, credit is a tool. Debt is the painful result of misusing that tool. So, how do you use credit cards wisely? Simple. Use them for regular purchases you'd make anyway, like groceries or gas. Pay the bill in full every month. And set up autopay to avoid any slip-ups. Don't max them out, and don't open 5 new cards just for the sign-up bonuses. It's also important to know that negative marks don't stay on your report forever. Most negative items, like late payments and collections, fall off after 7 years. Hard inquiries only impact your score for about a year and are gone completely after 2. The older a negative item is, the less it hurts your score. Progress is possible. Let me tell you about Marcus. At 24, his score was a dismal 520. He had missed payments and maxed out cards. He got serious, set up auto pay, aggressively paid down his balances, and opened a secured card to build positive history. In just 2 years, his score jumped to 780. He went from being denied for everything to qualifying for the best interest rates out there. This is what's possible when you take control. A good credit score is your key to major life goals. For buying a home, you'll want a score of at least 620, but a score over 740 will get you the absolute best mortgage rates. For a car, a higher score means a lower interest rate and thousands saved. Even landlords often check credit, and a score above 650 makes you a much more attractive tenant. So, to wrap it all up, your credit score isn't just some random number. It's a direct reflection of your financial habits. And the best news is, it's never too late to take control and improve it. Here's your final checklist. Know your score and check your reports regularly. Pay all your bills on time. Keep your credit card balances low. Limit new applications and dispute any errors you find. Credit can be your greatest financial ally. The power is in your hands. Use it wisely. Thanks for watching. If you found this helpful, please hit that like button and subscribe for more tips to master your money. See you in the next video.